what about the broader financial and underlying economic strength of Indonesia in a rising inflation environment? I want to refer specifically to an Atlantic Council report that came out not so very long ago, warning that there was a lot of potential for sovereign debt crises in lower and middle income countries as we move into the next cycle of the economic situation. How do you think Indonesia is positioned in that context? And do you see within the context of the G20 a potential sovereign debt crisis in middle income countries being on the agenda?
Well, this is also one of the discussion on how to address the debt offering in low-income countries. I think we are working closely with international financial institutions to ensure those can be solved, can be mitigated, to ensure that those can be handled properly. For Indonesia case, I think we do not have any problem on our debt because public debt is well maintained under the fiscal deficit no more than 3%. And normal situation, private debt also well maintained, as well as the banking. I think Indonesia for the debt is not the problem. What we are discussing is about the debt issue on the low income countries, Timor.
Let's go back to the inflation picture then for a moment, because one of the conversations that is becoming very loud globally, particularly in the United States, is the suggestion that the world, and particularly the US, has been behind the curve on managing the inflation problem. Do you think that might be leveled at Indonesia at this point in time? I mean, your growth rates are high. You're talking about a rebound. Inflation has now popped into the target range of 2 to 4. The chances of it accelerating beyond that are how high, do you think? And do you think you might be a little bit thinking about bringing your timeline a bit forward?
Well, there are four reasons why we do still believe our inflation will be within our target 3 plus minus 1%. First, we are still operating in negative output gap. Even though our demand is increasing, our output potential is far, above our domestic demand. So output gap, the pressure of fundamental inflation is still low. Second, the expectation inflation is well anchored. Third, exchange rate stability well maintained. So exchange rate pass-through, being maintained. And the fourth and last but not least is a close coordination between the government and central bank to ensure the pressure of inflation, especially on the food prices, energy price, can be well maintained. So we do still believe that our inflation this year will still within our target 3 plus minus 1%. We will starting to have inflation in 2023, Timor, because our domestic demand keep rising, and that will be need to be addressed toward our policy setting at the end of this year.